Hey, welcome back to my crazy show of what the hell's going on with the real estate market. A lot of stuff to talk about. Things going up, things going down, things going sideways. Where are we going to land? We just don't know. And that's the thesis of today's story. There's not really a lot going on except for there's stuff that's building up. A lot of stuff that's building up. First thing, Chairman Powell said, we're in a world of hurt. We need to do something. And we've been telling people this for a very long time. We need this to happen. We need the economy to settle down. We need the inflation to settle down. And that unfortunately means higher rates. It also means more unemployment. We're not seeing it yet massively, but it's going to happen. It's starting to happen. As a matter of fact, Snapchat just took out 20% of their workforce. Not for any major reason. I think revenues are doing well. I think it's mainly because they're shoring up for the long haul. Like most financial experts today, we're talking about what's going on, not just today, but in the next year, in the next 3, 5, 10 years. How are we going to be, and how are we going to shore this business up, or our business up, so that it survives through the downturn, a downturn. We don't know how bad it is. Experts say it's going to be bad. The politicians and the media say it's not that bad. So, it's completely up to you to decide how you're going to figure this out. Wells Fargo just stopped originating loans, or they're going to stop originating loans. That was a news piece. I didn't actually find it. I heard about it last week. I listen to a lot of different news sources, not media, but news sources for the real estate business, for the real estate industry, for the finance industry as well, because they're kind of intermingled, right? One of our demi competitors, I would want to say, a very small competitor, is shuttering their doors. They're publicly traded, I believe, or I'm not sure. They were a discount broker, and it just goes to prove there's a reason why we charge what we charge, because we need to sustain a business. We need to sustain not just the agent, but the people behind supporting that agent. This company is called Reali, R-E-A-L-I, and I saw them in our neighborhood a couple times, and I'm like, okay, another one. They'll go away when times get hard, and I didn't expect them to shutter this quickly. I obviously didn't know much about them, and I don't really care about them, because when you're a discount broker, all you're offering is basically being a for sale by owner and doing it on your own, just with the help of adding it to the MLS. You're not getting anything when you do that. What we do is a whole lot more. We help you prepare, we help you with financing, we help you with all this other stuff, and then we also sell your house and we negotiate. When times get tough, those discount brokers tend to go away, and that was the first one to fall. I don't know if you remember, but there's places called Help You Sell and Assist to Sell and all these. They're flat rate. I don't know exactly what their thing was, but I used to have that mindset of, oh yeah, that's right, we shouldn't charge that much money, but it costs money to do business. It costs money to bring people in to support your transaction. And that's what I've learned over the last 10 years is, yeah, you know what? You need to do it. You need to do it right. You can always do it half-assed, but then you're going to get half-assed results. We talked last week about Evergrande and Starwood. Evergrande's Chinese financial institution or hedge fund. And they last year were in the news because they were going bad. And now this year, there's another one, just like Evergrande, probably 3 times bigger. They're having troubles right now. And my understanding is that these companies are built up like Ponzi schemes, whereas when you buy a new house, you put a deposit down, but you don't make a payment until you actually close on the house. That means it's complete. The DREs look through it, the inspectors have gone through it, all the contractors have gone through it, the home builders have gone through it, and the buyers have gone through it. We all agree that it's in a certain condition, not 100%, it's 90, 95% perfect. And then you close on it, and then you start making payments. In China, it's completely different. It was built on, if you want to buy this house or apartment, you put your deposit down and you started making payments right away before it was ever built. So you're buying something in the future, you're paying for something now in the future, and that's illegal here in the United States. We're not allowed to do that. And as a matter of fact, that's quid pro quo. And anyway, what happened was hundreds of thousands of Chinese citizens went and bought apartments and houses and started making payments on it. And then the money went away, dried up. And billions and billions, if not trillions of dollars have disappeared. And we're not talking about it in the news right now because we don't want to talk about it. The media and the policymakers here want to keep our heads in the sand about what's going on globally, and it's important that you're aware of this. Go do your own research. I'm not telling you what to do. I'm telling you, here's some information you should go look and ask more questions about. And don't look at the media, the franchise, ABC, CBS, or whatever. Starwood Capital, just like BlackRock, they're selling off their stuff. They're selling off all their wares. $1 billion. This Starwood Capital is selling off $1 billion worth of assets. Open Doors selling off, I don't know how much. They're not talking about it, but I'm looking more and more. And let me find something real quick for you. Do it real quick. I'm gonna go here. Inventory, and then we'll go to. I've been actually doing a lot more. Found a whole lot more. Last time, I think I want to say I found 106. Well, guys, I found over 400 homes and there's duplicates. I'll tell you right now. You look at two of these, and I can guarantee you that these will, see, there's a lot of duplicates. So let's just call it 350 because of, veto error. Veto error. It's a thing. I'm looking all the way up to Sacramento. I'm looking for all the houses I can find within the counties I can search. I have found 434 less the duplicates and mistakes. I haven't gone through, I spent hours on this yesterday looking through all of this, trying to find out what's being sold, what's not being sold, if something's been sold. There's been a couple, right? So let's just take a look at this one here in San Jose. This one right here on Race Street. It was listed for $1,113,000. $13,000. They bought it for $1,063,000. That sold for $1,030,000. They lost $33,000 just on that. Right? So if you have stock in Open Door, I'm not telling you what to do. Just be aware of what you're buying, right? There's a couple other ones here that have sold. There's a lot that are pending right now, and my fear is that people are buying at the crazy time. So this one just sold. It was listed at $410,000. They lost $60,000. They're losing their shirt on pretty much every asset that they're buying right now, that they bought in the past. And look at this number. This number right here. Right here. No, that's the wrong one. Right here. $331 million just in Northern California. And that's not every one. I'm telling you. Yeah, that's the ones that they bought. $331 million just in Northern California. We're not talking about the other 49 states. They have billions of dollars in houses that they're selling. Guys, if you're thinking about buying a house and you need to buy a house, this is the time to buy it. I don't know how else to explain it to you. Yes, the market's going to crash, but we're only expecting it to go down maybe 10%. At the very, very worst is 20%. But again, we talked about this. When the market gets worse, as the market goes down, actually, sorry, let me go over here real quick. Remember this little chart? I keep going back to this chart. Where is it? Blank. This one right here. As the market stalls, you have less competition. You have less competition right now. You have probably 1/10 the competition that you had back in April, which is actually good for you right now because you can call the shots. I'm working with a bunch of buyers and sellers right now, working through the scenario. I'm so busy right now because right now is the time to buy if you're thinking about buying. Why? Well, when the market crashes, yes, and the market will crash, but we don't know if it goes down 10%, 20%, 50%. We don't know. We don't know. But as the market continues to go down, more and more competition enters the market. So that house that you could buy and choose what price you're going to pay and what concessions you're going to offer up and what contingencies you actually get to buy an asset and learn and take the time to do your due diligence. When there's more competition, all of that gets thrown out the door, and you are buying a product that you don't know what you're buying, right? You might have time to look at the inspections for, I don't know, 30 minutes. And that's if you get to buy this house, but you're buying it as is. Today, we're not doing as is offers. We're not doing that. We're doing it contingent on property condition. We're going to ask for repairs. We're doing all this stuff to do it. So, but Vito, what happens if I can buy it 50 cents on the dollar? Look, this is your primary residence, right? And in 10 years, your primary residence should be a lot more, right? If you play your cards right, as the market goes down, buy 2 or 3 more houses and then dollar cost average it. And as the market goes back up, then you can go and sell those. That's how you do that. If you're looking to buy and sell a house right now, I have 2 clients right now. One's empty nesting. They're buying a smaller house. The other one is growing a family. And they're getting a bigger house, right? 2 different parts, right, of the area of the South Bay. So we're calling shots. We're in contract with one. We're looking at getting in contract with another. I have another client that's buying in South Valley, and we're picking and choosing. We're being very choosy, and we're finding the right seller, the one that are motivated to do that. We're going to get into that in a minute. Okay. Now is a great time to buy, right? Yes, I agree that the market could go down. I agree that you could lose a whole lot of value in it, but if you're selling and buying at the same time, it really doesn't matter. If you're buying investment properties, then it matters a little bit, but right now I'm actually looking at buying investment properties. So you get back to this whole open door thing, right? I'm telling you, look, wherever you're looking in Northern California, I can find a house for you that's been on market. I don't know. Let's see. I know I see them 110 days. This one, TFT, that means it's back on market and it's in San Jose. That's obviously a condo, right? There's houses that are selling, right? The houses are selling. There's right here, look, it's Sacramento. If you're looking at Sacramento, it's 119, 165, 153 days. Those are motivated. Well, these are all open doors. So they're motivated. They're going to work with you. And I bet you dollars to cents, you can probably pick that up for 458, 480 with concessions, with closing costs and rate buy down. And if they say no, you know what? We're going to go write 15 other offers. We're going to find the right right seller for you, right? You can actually hit these offers, get these houses into contract lower than what you think the market might go. I can't predict the market, but when you've been told by the higher up that you have $330 million just in Northern California, probably more. This is the one corporation that I saw, right? One trust that I found, 331 million. That's one of them. There's Offer Pad and Purple Bricks and all sorts of different companies out there that are iBuyers, and they're trying to buy houses at 50 cents on the dollar or whatever. They're buying it saying they're giving you market, but they're not giving you market. And then they come back and say, oh yeah, guess what? I just found, we did our due diligence and there's $120,000 worth of damage. We want that fixed. And oh, by the way, we're not charging you a commission, but we're charging you a 10% convenience fee. So yeah. All these people got waylaid. And that's why there is a multi-million-dollar lawsuit against this company. That's just one area, right? We're talking about 50 states in this union. So, be careful when you're working with that. All right, enough blah, blah about them. Foreclosure activity. It's all salacious. It's all about clickbait, right? Well, look, we're actually pretty even keel on bank-owned properties. As a matter of fact, let me see if I can get that open up real quick for you. Yeah, that's just this Bay Area, right? So I'm like, hey, I wonder. Let's see how many houses there are actually that are REO. Now, they're HUD homes, REOs. They're not short sale. They're not whatever other distress. These are just numbers that I'm looking at specifically in California that I can track in my MLS. So understand it's not everything, because there's certain houses over here that we don't do, and we don't have agreements with Redding up there or what have you, right? But there's 222. Yesterday there was 223, or 233, and now there are 222. Sorry, two screens. 233. Right? Why does that look like 200? Oh, that's why, because there, 233 total. Some of these are staying on market for a long time. There's not very many people in Burbank that are looking, but it's bank owned. Let's see how long it's been on market. 34. So, what I tell people when I'm working with them is look for houses that are on market 30 or more days on market, right? That means they're getting kind of wary of, hey, maybe I didn't price it right. So they're a little more open to working with buyers. Or they're just, they're not willing to work with you, and their head is stuck at, hey, this is my price and I'm sticking to it. And if the buyer can't figure it out, then screw them. Those are wish sellers. Those are wannabe sellers. Those guys have more ego than equity, and they're just really hard to deal with, right? This one's been on market 67 days. This one, Palmdale. This one's been on market. Where are you? Oh, hello. Hello. I can't tell. Different counties report differently. This one on market 1 day. It's 700 square feet. Holy moly. There's one in Oakland that we were looking at. One of my other clients we were looking at. It looks like it's the Leaning Tower of Oakland. It's crazy. Let's see if I can find it real quick. Back to results. Go to Oakland. Probably find it real quick right here. I think it's this one right here. Yeah, look at that thing. Look at this bad boy. Tell me that there's not anything wrong with this one. That's a door buttoned up by by plywood. It's not even finished. It's not even finished material, and they didn't even lip it right. So, what do I know, right? Obviously, it's not leaning, but I would say that this is a complete teardown. Just start over, right? Some wannabe investor bought it, ran out of money, had drywall in here, and then they lost the house. I hate to say that I'm laughing at it because, HGTV makes it sound so easy to buy these things, and they probably bought it for like $800,000, thinking that they could sell it for 1.2. And now look. And let's see how long that thing's been on market. 6 days. So again, those are ones you want to wait for. But guys, 233 houses for sale, or REO houses. REO is real estate owned. It's just a term that the banks use for the assets that they repossessed. Right? So speaking of repossessed, I know I hammer this every week. I always talk about this every week. The automotive industry has a shadow inventory of repossessable vehicles a mile high. I don't know how else to explain it. I told you about the subprime. Now, normal loans are faltering or defaulting, right? The subprime loans, people that are driving around their $100,000 Tahoes and Suburbans when they shouldn't have been buying those things in the first place. They were given subprime loans because they have bad credit, not enough income to support it, whatever. They got shoved into this deal thinking they can handle the payment, which is over $1,000 on average now, which is ridiculous for a regular person to be able to afford a $1,000 a month payment on a car. It's ridiculous. You should never get into that. That's financially irresponsible, but people do it because they're not financially literate. That is going to be a problem. That's going to be one of the tipping points. And I say this all the time. People that watch it say, okay, yeah, okay, whatever. Stop buying cars that cost you $1,000 a month, unless you're bringing in 500 grand a year. Okay. Our numbers of 40 days on market have kind of leveled off for the time being, and 90 days are continuing to grow. Remember 2 months ago, that was 37. Now it's 110. That's almost 3 times in 2 months. That's almost a 300% increase in 2 months. Let that sink in for a minute. Houses are staying on market longer. Oh, but Beto, I hear that the pricing value is staying the same. For the most part, it is. More and more deals are being had. There's more and more motivated sellers and buyers that are savvy. Buyers that are like, hey, you know what? I'm going to wait for the right deal to come along. And I have buyers that are like that. We write multiple deals and we get it to where it's perfect for them, but not so much for the seller. And we get close and then the seller snaps. And we're just looking for the right seller, right? That's okay. Our inventory is shrinking a little bit, but I have to say that I don't think it's the number of transactions that are growing, although this last week it did grow quite a bit. I think we're also taking a lot more houses off the market. So what we're seeing here is the numbers retracting a little bit. The actual inventory is retracting a little bit. We have a whole lot more houses going into contract, but we have a whole lot more houses canceling. So the wish or the wannabe sellers, the sellers that are selling on hubris and ego and greed, they're saying, you know what? If I can't sell it for this price, I'm going to take it off market. That's good. Those people need to go away so we can have a normalized market, right? That's okay. This price to sales price ratio, yeah, it's not 109% anymore. It's consistently about 100, right? And on par, right? Last year, we were averaging about 109, 107, 109, 109, 109. Looks like, yeah, pretty much. Same thing with the high. 22% over list price, that's pretty good, but not as good as it was back here, 41%. Right? That's a high. That's the anomaly, right? That's the outlier. So you have your little bell curve of what have you, right? And the high over here is the outlier. Same with the low, right? 75%. We've seen these things go. And those are probably homes that, like that Leaning Tower of Oakland, they needed a lot more work and it wasn't priced correctly. And it sat and sat and sat. And the seller's like, just get rid of it, right? Doesn't have to be the Leaning Tower of Oakland. It could be something completely different. Our average sales price has gone down just a little bit, but on average, yeah, I think we're hovering okay for the most part. I think this number is going to go down. One thing that I'm pretty sure you're aware of is that we're seeing rates go up. I think I mentioned it before. Powell is going to increase the rate again. Now, people are saying 50 basis points. I think it's going to be 0.75. The next 3 months or whatever that they do the raise, that's the way to get this inflation under control. increase the rates, see that unemployment go up, see the consumer confidence go down. We need that to happen because people are buying houses that they can't afford. I was talking to somebody the other day, Monday. I was at beautiful day, and we're just finishing up a huddle, and this young kid, I don't know, 25, 20, 30, 25, engineer, software engineer, works at Apple. I gotta say he makes 250, 300. He can't afford to buy a house here. He just can't afford to buy a house. That's crazy. It's untenable, right? I understand the whole argument for minimum wage and all that stuff, but at the same time, when you're in a career track and you're making good money, what should be good money, and you can't buy a house, that's a problem. Now, I don't know if he has $1,000 car payment. I don't know if his bills are completely stacked up, kind of like I was in my 20s when I had so much debt. It happens, right? I totally understand that. But, you have to come down with 20%. You don't have to. You can do FHA, you can do 3% on conventional, you can do all sorts of things. If you're a veteran, you can do VA loan. And guys, by the way, I don't know how to get to this right quick. Let me see if I find it real quick. Right here. We're doing another talk, and you can actually jump on that little thing, hit that QR code right there and sign up for it. It is September 8th from 11 to 1. And we're going to have this talk, Luis and I, about using your VA loan. And guys, this works with the FHA loan too. There's a lot of different ways to do it. You can do USDA loan too. You don't have to have a lot of money. And right now is the time to do it. So if you have a minute, scan that in and fill out the form, and you can come to the webinar, whatever it is. It goes to San Jose State. I'm a graduate of San Jose State. So I like to do the outreach. This is when you can use your VA loan, your FHA loan, guys, right here, USDA loan. Why? Because you can come in with those contingencies. You can ask for the repairs. You can ask the seller to help with closing costs. You can ask the seller to help with rate buy down. Now is the time to buy these houses. These houses right here, the ones that have been on market for, 100 days. But what happens if it goes down? It'll go down. The market will go down. But what I want to wait till here. You can absolutely wait until there. But what happens is it's a very sharp time. It's a very, 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 talking about probably hours, if not days. Probably hours, where the market just goes like this, and all of a sudden you missed it. And now, guess what? There's more competition back in the market because the market's going up and up and up. Right now is when you buy your first home. Here is where you buy an investment property. All right, enough yelling and acting like a dad. By the way, my son moved out Saturday, and it was hugely emotional for me. I'll just put it that way. Didn't think it was going to be, but it was a tough day, couple days, and still miss him. Still a couple days, so it's still fresh. So the average sales price, and maybe I should have a running average over here. Let's see if I can do that really quick. Yeah, look at that. Average sales price over the last few months. And I know it's missing this last week here, which maybe I should change that. Let's see. This isn't how to do Excel, by the way. So yeah, we've lost a little bit of value on the average over the last year, about $50,000, about $48,000, right? Median sales price has pretty much hovered. That's the average consistent number. Days on market, houses stay on market a little bit longer. Last year it was 8. There were houses that were selling in hours. Now that's not happening anymore. We have 90 pendings, way better than it has been in the last couple months. Way better. But I think, again, that's a prelude to seeing the rates going up again, right? So we don't know. Closes last week. Again, it's been chirping up a bit, but this is a 30-day lag. So that's, these houses closed when they got into contract here, and that's when the rate went up. So I don't think it affected us. As a matter of fact, when the rates went up, our mortgage rates went down. And you can see it right here. Our mortgage rates chirped up and they came right back down to feed the frenzy a little bit. And now we're back at 5.75. So, and if you're working FHA, you get better pricing. If you're working VA, you get better pricing, right? We get that. If you're working a 7-year ARM, you have very, very competitive pricing. These numbers actually climbed up pretty high. Okay. Closes last week. Last year we had 152, so we're about half. On the average, we're about 45%. Again, I gotta make that C, so stand by. Yeah, 46.73% of last year. So our volume has dropped down quite considerably. All right. We have 36 back on market. That's been pretty consistent over the last couple months. TFT is transaction fell through. Back on market. The buyer said, nope, I don't like the look of the inspection, or I asked the seller to do this repair and the seller said no. So they said, I'm in my due diligence period. I'm backing out. That's why contingencies are great and helpful. They allow the buyer to be a little bit more protected over what they're buying. Kind of like buying a car with bald tires. You go to the seller and say, I want new tires. And the seller says no. You say, well, I'm going to go buy another car with new tires on it. Kind of the same thing, right? List price decreased. Let's take a look. This is 217, so it's roughly 40% of the listed houses right now. Not every house. It's not a direct correlation. It's just a round number, so you can take a look at that. All right. Across the nation, you can take a look and see what houses are doing. Everything in red, those numbers went down, right? Tampa went down. Cape Coral went up. Austin went down. Atlanta went down, up in numbers, right? These numbers are just going tick, 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 right, like right now. So there's nothing massively happening. This happened over the last couple months where numbers shot up, right? Numbers shot up. This is 2,200. Now we're at 3,200. Phoenix, 2,900. We're at 3,600. Right? The numbers keep tracking up. If we take a look at these numbers right here, these are just indicators for what's happening in San Jose. And you could take this to another town. You could take it to Oakland. You could take it to Red Bluff. You could take it to St. Louis. You can take it to New York. You could take it to Atlanta and roughly correlate by 5 or 10%, saying those numbers are going to be roughly the same. So if I took that same number, and use these numbers here to figure out what my actual average home per square mile is, you're going to get roughly the same numbers, 5 or 10% difference. That's why I don't track all of that. I could, but it would be boring as hell and nobody would watch this. All right. So what else is happening? Median sales price of existing homes. Still 403. Foreclosure we talked about. Interest rates we talked about. Mortgage lenders going broke. It's actually a thing. Lenders are going to go broke. As a matter of fact, there was another one. I think I talked about it. There was Squirt or Squat or something. And then Loan Depot stopped doing their wholesale side, and I heard Wells Fargo stopping lending because it costs money for them to manage that service. So they're getting rid of all of that. More open door. We talked about that. There's SNAP, and mortgage demand lowers, which is part of the whole concept of this thing right here. Right? Mortgage demand is waning. Rates go up. If you have a house and you have a mortgage on it and you refinance to 2-3%, there's no reason for you to refinance to 5% or 5.5%. It just doesn't make sense. Why would you do that? Nobody would do that. Unless you're thinking about moving and you need the equity of that house or something, you need to pull money out of that house or what have you, then it would make sense because it's a short-term loan and then you're going to do blah, blah, blah. There's strategies behind that. That's why you work with people that understand the process and lenders that understand the process, and we work together as a team, educating you along the way so you can make the correct decisions, and we guide you. We never sell. I don't sell anything. I help people understand the entire process because it is very complex. You can do it yourself. You absolutely can. You absolutely should. Try it if you want, but selling a house and buying a house and having a mortgage in between and trying to figure out how to negotiate and all that stuff, if you want to do that, by all means do that. I don't have a problem with that whatsoever. I think that's it. I think we've kind of run our way. It's going to be hot out there this weekend, guys. Dig a hole, stay cool. If your power goes out, let me know. The first one that tells me about it, tells me that their power goes out, gets this scrunchy puck. Just let me know and I'll drop it off at your house. Oh, and you have to be here in this area. Don't expect me to mail it up to you if you're in Oregon. But your power isn't going to go out in Oregon, so I'm not really worried about that. Yeah, that's pretty much it. All right, I'm Vito Scarnecchio with the Abitano Group. The Abitano Group, see? Powered by Compass. We'll see you out there.